in your entire trading history. Just with only boom and crash. Just with only boom and crash, you can literally take those trades on only boom and crash without diversifying into other indices, and yet become very, very profitable, highly profitable in trading. And that's what my partner is going to show you, how to successfully win in the boom and crash market. It is very profitable, less leverage, highly simple, and yet more profitable. You see the excitement people are having is because of what he has taught them on boom and crash. You know, there are many people in the group currently who have not said anything or who are quiet. It's because they are really literally milking on their own. They are making money. They send us private messages how they are winning successfully daily. They make money, and that's what he's going to be showing you, how to successfully navigate through the boom and crash indices. Please get your pen and your paper, pay attention, pay rapt attention, close attention, because what you'll be learning as he shares the screen, what you'll be learning as you gain focus, what you'll be learning to change your life. So I want you to get prepared. Today is for boom and crash. Learn what is teaching you on volatility 75S and whatever else it shows you. Learn what is teaching you, put your mind into it. Be focused, learn the strategies that are in place. Know what you should look out for before you enter the trade. Know what you should look out for before you enter. Let him guide you. And then I believe as you come out of this trade, you're going to be successful. So I'm going to hand over the floor to him right now as he takes over.
All right, thank you very much, Mr. Lawal. Thank you so much for... Mr. Lawal is a great guy. Mr. Lawal is my confidant, my partner, and we're in this game together, man. It's been a wonderful ride, you know. It's been a wonderful ride. It's been a wonderful ride. Let me put up my screen right now. Let me put up my screen. I hope you can see my screen. All right. So a lot of people, first off, welcome each and every one of you to the $15 Masterclass. I mean, this is one of the places where we expose some very, very massive things to a lot of you. Now, a lot of you are looking at the charts, right? But before I will start talking about what we have on the charts, I'm going to first do a theoretical work. And that work, I think I told you guys on the main group that you should remind me on Monday, and we are going to do some things about trading psychology. Now, I discovered that some people believe that, some people just feel like, if you have someone that is giving you signal, you will make money. Do you get? And some other people just feel like, if I can learn this thing, I'm also going to make money. See, the truth is that a lot of things that make people profitable are not just the technical analysis alone. Now, for example, a market like this, where we have little or no information as regards fundamental indicators. Now, when I mean fundamental indicators, if you trade Forex, basically, you discover that there are two ways to analyze the market. It's either you analyze fundamentally or you analyze technically. Do you get it? Now, a market like this, where there are no fundamental indicators, this is volatility indices market. And it's, for crying out loud, it's only one broker that has ability to, in fact, simulate this kind of algorithms and put together this kind of charts and all of these values, and then allow people to trade on them, basically. So that tells you that there is just limited information. In fact, it's not something that you want to go and confirm. If their chart is good, and then you go to TradingView, you can't find their chart on TradingView, basically. Do you get that? So this market is one that is just, it's a monopoly. It's a monopolistic market, basically. Do you get? There are no fundamental indicators. There are no news on Bloomberg or FX Street or FX Factory where people go to get all of those information. You can't find news on Yahoo Finance that will help you to make money on volatility indices, basically. Do you get it? So every single thing that makes us profitable is right in front of us, right? So, but there are two things that we'll actually talk about tonight. Before I go into talking about the Boom 1000 and all of that, Boom 1000 and volatility 75, I would first like to talk about trading psychology. I'm going to talk about that a bit. Now, when I mean trading psychology, I won't see. If you look at what I posted on the group, I said you have to be open-minded. If you're not open-minded, whatever I'm saying tonight, you just be like, I beg, let him do quick and give us signal. The truth is, if I give you signal, you will blow your account. Some of the trades that I take, some of you see the kind of screenshots I post on the group where I'm taking $1 to $40-something, $50-something. Do you get? Where I'm taking $5 to, there was one I took $3 to $139. I think I told you guys of how that I took $7 to over $700. I took $7 to $300 and something, close to $400. Do you get? I took $0.5 to $57. Do you get? Now, a lot of you think that these things are magical. I mean, if had it been he gave me that signal, I would have taken the same trade. If I give you that same account and give you the signal, you will blow the account. Do you get it? So it is beyond just collecting signals and click buy, click sell, do all of that. No, I want to talk about the fundamental side of the analysis, the fundamental side of profitability, the fundamental side of you making money on derivatives, right? Now, everything that you need to know before you get into the charts. Now, the chart is right in front of us, but I want to talk about something that is outside of the charts, basically, and that is how your mind should be. Do you get it? Now, some of you are afraid, and the major cause of fear is the fact that you have a small account. And you're like, before I take one trade, and this one that Derek is manipulating this chart, and my account blows off, that means I'll not have money to fund again. That fear alone is what makes people lose. Do you get? Now, trading is between two parties. I always say this, it's between you and the market. What makes you profitable on the market is not just your ability to enter a trade on the market, right? It's your ability to enter that trade in yourself first. You first have to conquer yourself to go into a trade. If you go into a trade that has not passed through your mind, that has not been psychologically accepted by yourself, you will end up losing that trade. I made an analogy on the group earlier on, and I said, I can give a signal to somebody, a buy signal, and the person clicks buy, right? And the trade starts going down. A bearish candle comes into the market, and then the person is like, I'm losing, right? And then the person decides to close the trade, right? And then when that person closes the trade, the market starts moving upwards. And you're like, But immediately I close the trade started moving upward. Deriv is manipulating. They are watching my chart. Deriv is not doing anything to you. It is your psychology, your mind. You are having the wrong mind. Do you get it? You are having the wrong mindset, basically. You are having the wrong mindset, basically. If you have the right mindset, you would understand that a bearish candle doesn't mean that the market is going downwards. Do you get? The same way we are having, we can look for, let me go to normal charts. I just want to show us this before we start talking about V75-1S and then boom and crash and all of that. Now, we can see that a market is actually in an upward movement, but then there are bearish candles on that upward. Now, first you have to understand that the market has a fractal structure. A fractal is kind of like a structure within a structure. For example, I can draw a circle and then I can draw another circle inside of it. Now, if you look at, I think they call that concentric circle, a circle that has lots of circles inside, right? Now, that circle, the structure itself, that particular concept is made up of circles. Now, there are smaller circles inside. For every circle that you break, right, you have a smaller circle inside. That's exactly what the market is, right? Now, for every candlestick that you look, at, right? If you look at this candlestick, if I should put this on a lower time frame, you will discover that this other candles inside, basically. right? Now, remember on the 1 hour time frame, this was just a single candlestick. And now putting it down, this is what we have. If we expand this, we are going to see this. If we expand this, now, if you put this on a 15 minutes time frame, you're already seeing bullish candles inside of it. But that doesn't necessarily mean that this is a bullish market. Do you get? So I can give you a signal at this point to sell V100. Please don't sell. I'm not saying sell. I can give you a signal at this point to sell V100 1S. And then when you enter a sell here, the market continue going up. And you're like, the market is going up. I'm in loss. Understand that this is the structure of the market. The market can be in a downward movement, but then you will see bullish candlesticks. Bullish candlesticks doesn't really mean that the market is in a bullish trend. Do you get it? It is just the structure of the market. There are things called impulses and corrections on the market, basically, right? Now, for the market cannot just come down altogether. We must have what? An impulse downward and a correction. Impulse, correction, impulse, correction, impulse, correction, impulse, correction. That's just how the market moves, basically. Do you get it? So when you are able to understand this inside of you, understand what you actually need to do when you get to the market, basically. Do you get it? So first, you need to accept how the market works inside of your mind, right? You need to understand that you can enter a sell and the market begins to move upwards. It doesn't necessarily mean that the market is in a bullish movement and that your trade is wrong. No. It is fear and the wrong psychology that would make you think that, and then probably kick you out. You decide to just leave the market and say, the market is going against me and all of that. Do you get it? Do you get it? That is that for that. And then secondly, management. Risk only what you can afford to lose. Don't go and over risk yourself. Don't go beyond your risk appetite. See, if losing $1 will make you cry, don't risk $1. But if you are here in this place and your mind is not as strong as that you should be able to lose $1, then I think you should go back to kindergarten. Do you get it? Because the truth is, in this system where we are, the markets where we are, basically, I posted something, a write-up I did on the group, and I said, as long as the market remains, right, profit and loss will never cease. The fact that you make a loss doesn't make you a loser, right? And the fact that you make profits doesn't make you a winner, basically, right? Your ability to be a winner is your ability to consistently make this profit and then withdraw. Do you get? And you discover that your withdrawal is more than your deposit. That's what makes you profitable. So people deposit $500 and then they lose $400. Then they make $200 and they say they are profitable. You are not profitable. You're a loser. Do you get it? Until you can make withdrawals more than your capital, that's where we can now say, okay, you are profitable. Meanwhile, if you have the strength, you can actually take this trade I just entered now, but on a very, 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 the lowest lot size. The lowest lot size on V101S, the lowest lot size on V101S, I guess it is 0.2, sorry, 0.1. I'm not mistaken. Yeah, that's the lowest lot size on V101S. If you can, it's not compulsory, but this is the lowest lot size. Just go in with the lowest lot size and let's see how this trade is going to take us, right? So I've given you one signal. Now, continuing what I'm saying. I'm saying that you having the right mindset is actually going to award you the ability to take trades that will still keep you at peace when you take those trades, right? So do not for any reason risk more than what you can afford to lose. If your risk appetite allows you to lose $5, you can risk it. If you cannot lose $5, do not risk $5. Do you get it? If you cannot risk $5, do not risk $5. Do you get it? Like I'm saying this again. If you cannot lose $5, do not risk it. Do you get it? So that you won't go more than yourself and then you lose and then you start crying and then you, come on. It doesn't work that way. If you cannot risk it, do not use it. If you cannot risk $5, if you can't afford to lose $5, don't risk it. Don't go into the market with it. Do you get? Or if you are going into the market, make sure that your stop loss is something that can make you lose below your risk appetite. So for example, if you want to set your stop loss on a particular trade, set your stop loss on a spot where you know that, okay, it is below your risk appetite. And that calls for position sizing. See, if you know that you cannot lose, and then you say, okay, the maximum I can risk on this trade is $4. For example, now this trade that we entered now, if I want to set my stop loss, and okay, and I say, okay, I want to risk $4, right? This is where $4 is on the lowest lot size. So all I'm saying is that if the market gets to this point and kicks me out, okay, good, I've lost $4. Do you get it? But then I'm putting this, when you take a trade on a small lot size, basically, you have all of the ability to maintain that trade in the long run. So if you take a trade on a small lot size, you can actually place your stop loss far above where the market cannot get to. But just imagine this one I entered with 1.0, just moving up small, it's already $22. If I take this to where my first lot size is, I'm already risking $35 on this trade. Just imagine, because I entered with what? A big lot size. Do you get that? So risk only what you can afford to lose. Do you get that? Now, also have the right, be positive on the market. Understand that understand that losses are part of the game. You must make losses. You must. There's no trader that would when people start telling you things like, I have a robot that's 100% accurate. It's a lie. You can never be 100% accurate on the market. The reason why you can never be 100% accurate is because the market runs with uncertainties. As long as the market remains, profit and loss will never cease. So it is normal for you to make loss. But when your losses are consistent, you are making losses back to back, and then you are not making profit at all. Come on. That's when we should now start asking you questions, basically. But for you to make a loss, it's not wrong. But when your losses are consistent, such that you've not made profit, that's when the problem comes. Do you get it? So talking about that, please guys, everything, this is part of our perfect strategy. A lot of you are waiting for me to start drawing trend lines and start saying a lot of things and say that's the perfect strategy. Part of our perfect strategy is having the right trading mindset. If you have the right trading mindset, you can actually run with everything we are telling you, right? So part of our perfect strategy is having the right trading mindset. Guys, I'm stressing these things because a lot of people will lose in the market, not because they cannot analyze, but because they have the wrong mindset. Do we get that? But because they have the wrong mindset. Do we get that? So without wasting much time, I would be talking about, first, how to grow a small account. Now, there's nothing much, when talking about how to grow a small account, there's nothing much concerning that, right? Each time I want to grow a small account, there is one place I used to come to, and it's one of my favorite pairs, V75-1S. V75-1S, it's one of my favorite markets. It's one of my favorite markets, guys. V75-1S is one of my favorite markets, basically. If you want to grow a small account, don't go and be looking for volatility 75. Don't go and be, even if you can enter volatility 75, enter with the lowest lot size. Your account is on $5 and you are afraid to trade. What are you looking for on V100? You want to kill yourself? What are you looking for on V100? Your account is on $5. You are looking for V100. You are looking for step index. Do you want to kill yourself? You have a small account. What I'm going to advise that you do, look for trades that are less volatile, all right? Look for trades that are less volatile. Look for markets that are less volatile. And one of those markets that would help you is volatility 75-1S. Then the next I recommend is volatility 51S. Sorry, volatility 50. Volatility 51S, please don't go there. It will wreck your life. Volatility 50 and volatility 75-1S, they are the good guys for your small account. They are the good guys for your small account. Please and please, if you have a small account, stay away from V100. Stay away from step index. Stay away from V75. They will wreck your account on a small pullback. Do you get it? So my strategy for growing small accounts is simple. I look for origin trades on V75-1S. On smaller, on less volatile pairs, I look for origin entries. Now, when I mean origin entry, for example, let's say the market, let's say we are in a bearish, we want to have a bearish market now. Let's say, for example, I don't think this is going to be bearish, but let's just say, for example, we want to have a bearish market. When I mean origin trade, I'm looking for a trade at a spot like this, right? If let's say we want to have a bullish market, right? And I'm looking for a buy. When I say origin trade, I'm looking for a trade at this low. I'm looking for at the lowest low. Do you get? So I'll draw my trend lines, analyze the market up until the market wants to start moving up. I jump on a buy. And then all of a sudden, I run into crazy profits. And people are like, how are you able to take this? How are you able to do that? Come on. That's exactly what I'm doing. If you look at many of the trades where I take small accounts to big accounts, check the pair. It is V75-1S or V50 or V10. Do you get that? That's exactly it. You want to look for origin trades. And I think right now that V75-1S is beginning to sell. So you can actually also, I've given you two signals right now, right? You can actually enter, but please use the lowest lot size, 0.005, or at least 0.010. Please, nobody should go and use 1.0. No. If you want to take this trade, enter 0.005 or 0.10, right? 0.10, sorry. 0.010, sorry. That's, if you enter this trade on that, it's going to give you some good bucks, right? So that's it, friends. That's it, friends. You want to grow small accounts, look for less volatile trades. Guys, I've given you two signals, although we are still waiting for V75 and for V100 1S to finish all of this nonsense correction. We know it's going to sell definitely, right? And then for V75 1S, the sell has already begun. You can actually enter this with the lowest lot size and then enjoy yourself with profits, basically. Do you get that? So now, let's talk about Boom 1000. Let's talk about Boom 1000. Let's talk about Boom 1000. Oh, I left the trade and it actually spiked. You see, that's exactly what I was talking about. Now, for Boom 1000, please, guys, open it and listen to me. For Boom 1000 can make you a lot of money, guys. Oh, wow. Our V75, our V100 1S is already getting into profit. Guys, hold these trades. Hold them. Don't let them go. They will give you money. Some of you, the $15 you paid, you can actually make it tonight. Do you get? So for Boom 1000 spike detector, I call this spike detector because, I mean, it's something that it is working. Guys, I want to teach you guys a cheat code, a secret. I want to teach you guys a secret. Who is leaving the chat? Who is leaving the chat? All right. So I want to teach you guys a secret for Boom 1000. I hope you guys are getting, if you are getting anything from what I'm saying, put your best emoji in the chat box. I want to be sure that you guys are getting me. Now, if you have questions, write down your questions and keep them. If you are getting what I'm saying, put an emoji, your favorite emoji in the chat box. I want to see it. What I'm saying, if what I'm saying makes sense to you, put your best emoji in the chat box. In the chat box. Put your best emoji in the chat box. I'm waiting, guys. I am waiting. I am waiting. I want to see your best emoji in the chat box. I want to see your best emoji in the chat box. I'm waiting, guys. If you can hear me, hope you guys are hearing me. All right. I just have one person responding. What about the others? You're not understanding what I'm saying. If you're not understanding what I'm saying, I can't go on with the Boom 1000 spike detector. I have to make sure that you guys are getting me. All right. Okay, I've seen a lot of messages right now. All right. Okay, I think I'll just proceed. I'll just proceed. V100 1S is really, really playing with a lot of people's accounts. Please, if you don't have a big account, just exit the trade. Just run away and leave it. If you don't have a big account, run away. V100 1S wants to mess with some people. But we know that all of this is just a correction, and that it's still going to fall into profit because it's on a bearish move, basically. Now, I want to talk about V75, Boom 1000 spike detector, and open your ears now. For you to be able to catch spikes on Boom 1000, I mean, this is one of the sweetest things. If you look at my charts, I'm always, in fact, you can literally get my strategy from my chart. If you look at my chart, you can get my strategies from my chart. And all of these things you are seeing here, they are not, it's not like the stuff finished spiking and I put, no. All these lines you are seeing here are places I drew. These are setups I did, and the market came to meet my setup the way it was. Do you get it? The market came to meet me. I didn't go to meet the market. Do you understand? So I want to show you very simple strategy, how to catch spikes on Boom 1000. And we're going to practicalize it tonight. You can see, guys, if you can do screen record, you can analyze on your phone, do the recording, and watch the spike happen. Send me the video. We are going to use the video to pepper those people on the main group, those ones that refuse to pay for the masterclass. We are going to use it to pepper them. Everybody will go. See, if you can, what I'm going to show you right now, you're going to see how it works, right? Now, first things first, look for where the market is going to. Understand the general movement of the market. Look for where the market is going to. Is the market moving upwards or it's coming downwards? Right? Where is the market coming from? Where is the market going to? That's the first thing you should have at the back of your mind. That's the first question you should ask yourself. Where is the market coming from and where is it going to? Where is the market coming from and where is the market going to? That's the very first thing you should ask yourself. When you can answer that question, where the market is coming from and where the market is going to, then the next thing you begin to do is to identify what? The trend. Now, know this and know peace. You cannot catch spikes on Boom 1000, Crash 1000, Crash 500, Boom 500 without the trend. Wherever spikes take place from, it is a trend. It's either a trend or it is maybe a support area or a resistance area, basically, right? See, guys, have this at the back of your mind. Know this and know. See, if you want to catch spike, listen to what I'm saying. If spikes want to occur, it must occur from a trend. Don't go and look for a spike on a place where it won't work. Guys, first off, know where the market is coming from and where the market is going to. That will form how you draw your trend, right? Understand where the market is coming from and where it is going to. If it is in an upward movement, start looking for an upward trend. Start looking for ways to identify an upward trend, a bullish trend. That's exactly what you do. Don't see the fact that you see a bearish candle on Boom 1000. Don't think that the market is coming down. No. If you want to catch spikes, I'm announcing this again and again and again. Look for the trend. Spikes always take place from a trend. Now, I've established that fact. The second fact I want to establish is what a trend is as regards Boom 1000 or Boom and Crash, basically, as regards spikes. What we want to catch spikes. Now, let's talk about what is a trend. When we talk about a trend, what are we talking about? Now, for some of you, now, I think you can see my screen and you discover that, see this line here, this one, where my cursor is, this line we have here. I drew this line. Let me delete this stuff. Okay, let me draw this line again. Now, I drew this line from here, right? As you can see what's happening. Now, a spike happened from this, but it did not touch this trend line, right? A spike also happened from, a spike happened here, and this is where we took the trend line from. A spike also happened here, right? And it touched the line, right? A spike happened here, and it touched the line. But look at these other places. Look at these spots here. A spike happened here, right? A spike happened here, sorry. Let me delete all of that. Sorry, where's my trend line? Okay, look at this. Look at this. Now, a spike happened from this spot here. Look at what I'm showing you guys. A spike happened here, but it did not touch the line. It did not touch our trend line. Also, a spike happened at this spot here, but then it did not touch our trend line again. So if spikes happen from the trend, why did this one not touch our trend line? Now, I want to establish what a trend is. A trend is not a line. This line that we drew here represents the direction of the market. It represents these areas, the lows on the market, basically, as regards this upward move. Do you get it? All of this that we did here just represents one thing. It represents the lows on the market, right? And this is a trend line. We know that. But I want you to change your mindset of what trend lines are. Trend lines are not the trend. Trend, for example, we remember in physics practical, right? Let me quickly do this. Let me put a GERD on my chart. Now, we remember in physics practical, right? Those days in secondary school, when we draw a chart, when we draw a graph, right? When we draw a graph, and then we are asked to draw a line to meet all of the points on that chart, what happens? Some of the points on the chart will touch the line, and some points on the chart will not touch the line. But does that make those points wrong? No. But what happened? You discover that those points that did not touch the line, they are always close to the line. Do you get it? Now, what happens when, with this example I just made, I want to establish something now, and I want you to understand that when we talk about a trend line, we are not just talking about the entirety of the trend. This area where this line is, it is not just a line, it is a zone. Think of this line here as a representative of a zone. So the market can spike around this zone and not just on the line alone. Do we get that? So if we want to catch spikes, we've drawn our trend line, right? And then we're expecting the market to come to this trend line to spike. And then the market comes close and then it spikes before it gets to trend line. And we're like, oh no, my trend line is wrong. No, your trend line is not wrong. Your trend line is correct, but the market did not spike from the line. Rather, it spiked from your zone, from that zone. Do you get it? Deriv doesn't know you. Hope you know. Deriv does not know you. So they are not looking at your charts to see your trend line to say, okay, the market must touch her trend line before it spikes. No. So how do we catch spikes, basically? Now, when we've identified this, the major trend, if you look at my charts, I identified a big trend on the weekly time frame, right? I'm waiting for this to load. Okay, look at this. I identified a big trend on the weekly time frame, right? And then on the daily time frame, there's another trend here, right? If I come down to 4 hours, this trend will still be valid, right? But let's say I want to catch spikes. Now, when I want to catch spikes, also have this at the back of your mind. Remember, I first said identify the major trend. Secondly, identify the smaller trend on smaller time frames. Now, smaller time frames, by that I mean, let's say 5 minutes time frame. What's happening on the 5 minutes time frame? That is exactly, you either catch, for me, the way my strategy works is I either catch spikes on 5 minutes time frame or 1 minute time frame. Some people are like, how would you catch spike on? Do you get it? But if you want to catch spikes, you can catch spikes on 5 minutes time frame and 1 minute time frame. These are the smaller time frames I'm talking about, majorly, right? Now, first things first, after identifying the trends on the bigger time frame, you know actually where the market is going to. You know that this market is in an upward movement, basically, based on the trend. The next thing to do is to look for the market, the movement of the market on a smaller time frame, right? Now, when you come to the small time frame, what are you looking for? If this market, let's say you check on 1 hour time frame and the market is coming downwards, right? Okay, I want to also catch spikes on the downward movement. What am I going to do? Look at this. I put this on a 5 minutes time frame or a 1 minute time frame, right? But let's work with 5 minutes first. Now, when I put this on a 5 minutes time frame, what do I begin to do? I start looking for trend. Now, when I caught spikes that time, when I caught a spike on camera that time, right? Some of you saw what happened, how that I drew this trend line downwards on boom 1000. And you're like, for boom 1000, shouldn't we put this trend, shouldn't we do something like this? We should do something like this now. Do you get? That's exactly what you're expecting. But look at this. Look at, please make sure you are following, right? Now look at this. I want to, the market is in a downward movement now, not that it's in a bearish trend, but it's in a downward movement. It is in a correction. And I want to actually catch spikes regardless of the fact that the market is in a corrective movement, basically. Now, what do I do? Now, look at this. First off, I identify. I look at this and I'm like, okay, this is the trend. I draw this line. Let's say what happened. This first spike happened here and the market came down. Now, if you observe very well, everything that is happening here is happening in the zone. Look at this. The market actually came to this line, but it did not touch the line. Rather, it spiked before it got to the line. So it spiked not from the line, but from the zone. But at this point, the market actually touched this same line and spiked from here. This one, the market actually came down and it spiked again through this line. The same thing here and the same thing here. Do you get this, guys? So when I draw this line, look at this. I draw this line. I can actually extend this line. I would extend this line downwards. See, guys, let me tell you something. If this market breaks this area here, if this market breaks this region, if it breaks this region and it comes down to this line, see, I can bet anything, it will spike from this place. It will spike. In fact, I'm going to leave this trend line here. I'm going to leave this trend line here. Guys, it will spike from this place. It must. Because I said so. It must spike from this place, basically. If it doesn't spike at this line here, or before it's going to spike. Do you get that? That's the simple way to catch boom 1000 spikes. Locate the trend. Put this on a 1 minute time frame. Locate the trend. Locate the trend. Look at this on a 1 minute time frame. Just imagine this. Look at such beauty on the 1 minute time. Look at this, guys. Look at this. See, we have one spike here. In fact, I didn't even check this on a 1 minute time frame. We have another spike here. Look, guys, just look at this. In fact, even at this place, there was a baby spike here. Are you seeing this, guys? There's a baby spike here. And then the market came. It still spiked in this zone. Look at this area here again. This same zone. Guys, I mean, guys, it's exact. See, guys, it's the same thing we are talking about. Look at this. At this same area, this is it. And guess what? I drew this trend on a 5 minute time frame. But coming to the 1 minute time frame, we are still seeing spikes inside. Guys, are you seeing this? This is the price action spike detector. Do you get this? Even when the market is, let's say it's coming down, it is still spiking. Why? Because it is following what? A trend. Do you get this? Now, let's go to an upward. This is for a downward movement on boom 1000. There are still spikes on the downward movement. You can catch those spikes. Now, let's check for an upward movement, basically. Let's check for an upward movement. Look at this now. All right. Now, let's look at this. Let's check for an upward movement. We are seeing something like this. Are we seeing this? Are we seeing this? Look at this. We still have spikes here. We still have spikes. Just imagine, look at this. Look at this. We still have spikes here. So let's say you got to the market when this has spiked, and then this has spiked at this zone, and then this has spiked, right? Now you got to the market at this point. See, when you get to this point, you don't need a priest to tell you what to do. When you get to this point, before the market gets to this line, enter the trade. Enter the trade. Don't wait for anybody to tell you what to do. Before the market gets to this line, enter the trade. Before it gets to your trend line, enter the trade. Because sometimes it's going to spike from your, the market is going to spike from your zone, not from your trend line, basically. Many a times it can spike before it gets to your trend line. Some other times it can spike after it crosses your trend line. Look at this. For example, it spiked on the trend line here. It spiked below the trend line here. It spiked before the trend line here. Are we seeing that? So look at this. That's exactly it. Now, we can follow this and we are still making profit. Now, let's look at this other one too. The same thing that happened here. It's spiking on its own. If we extend this, you discover that it's exactly the same thing. Do you get? So I came to the market after this spike, and this spike. What happened? I allowed the market to come here. Look at this. It got to this zone. Now it came here, it spiked. It still got here, it spiked. If we move this further, we will discover that. Let's move this. Continue moving this. Are you seeing what happened? At this point here, the market spiked to this place and began to fall. And in fact, even got to this place again. Do you get it? So there are lots of things. You want to catch spikes, look for trend. You want to catch spikes, don't be looking for too much. Don't go to the smaller time frame. Look for trends on that time frame. Look for trend. If you can spot the trend, if you can spot what the market is doing, if you can catch what the market is doing. For example, now we are expecting the market to get to this line. Once it gets to this line, once it gets to this area here, it is definitely going to spike. Do you get it? So see, once you get to the market, look for what the market, after you finish identifying the bigger time frames, because many a times the market can be looking for ways to get to the big time frame. Do you get it? After you finish identifying the big time frame, right? The next thing to do, identify where the market is going to or where the market is coming from on a smaller time frame. When you can do that, you would actually be able to catch spikes, guys. This is how to catch spikes. This is the simple thing. All those spikes that you see me catch, this is how I catch them. I identify the trend. Once I identify the trend, I jump on the trade. Do you get that? Guys, are we learning something? If your eyes are getting open, please leave your favorite emoji in the chat box. Now, a lot of you that don't understand what I'm saying now, go and watch this video over and over and over again. Open your chart, practice, look for the trend, backtest this strategy. Look for this. See, you will see that it works. It works madly. Do you get it? Do you get it, guys? If you're understanding me, okay, Samson, I get you, you're understanding. Okay, any other person, is there anyone who is understanding what I'm saying? Is there anyone? Okay, good. See, guys, when you get back, do the FEZ, draw your trend line. When it wants to spike, allow the thing to get to your zone. When it wants to spike from there, on your video recorder, on your device, if your device can screen record it. You will see the spike happen live on camera. When it happens, send the video to me. Do you get it? Send the video to me or screenshot your stuff. Send it to us. See, guys, this is it. See, this is it. Catching spikes on Boom 1000 can fetch you crazy money. And this is without stress. It's not the one that, for example, see V100. V100 1S was just misbehaving. Okay, V75 1S is still on. Right? But for Boom 1000, see, I've not entered the trade. I'm expecting the market to get to my zone. And once the market gets to my zone, I enter. Do you get it? Once the market gets to my zone, I enter. And once the market gets to my zone, I enter. It can go below my zone, but I know it will still spike from that area. So my stop loss is, do you get it? Now, remember what I said. Remember what I said, guys. Guys, are we seeing this magic that is happening here? Remember what I said about Boom 1000 just now. I said something. Who can remember? I said if the market doesn't spike at this point here, right, it will definitely get to this area. And guess what? The market spiked at this point because of this support area here. Are we seeing this thing? Are we seeing this? Remember, I said it follows trend or your support and your resistance. And this is just a typical, we've established the fact that the market spikes on trend. And this is just a typical example of the market spiking at a support zone. Guys, see, you have more than enough to get yourself profitable on Boom 1000. Do you get it? So if this market comes down and goes below here, it's still getting to this. It doesn't miss the trend, right? It doesn't miss the trend. But I'm suspecting that this area is a strong support zone. So we can have something like, let's say, a head and a shoulder here. We can have something like a head and a shoulder. We can call this the head, and we can call this the both shoulders here. And here. So this can be the foundation of what? Another spike. We've seen what's happening. So the market can spike at this point and begin to go up again. And then we now have from here, the market starts moving upward. Starts spiking upwards, guys. Are we seeing this? I know definitely that the market will spike from here. It's no longer coming to this area. It's no longer coming to this area. It's not coming to this. It's going to spike again. Before it will spike again. Maybe before we even end this call, it's going to spike, guys. Do you get that? So basically, you want to catch spikes. First off, identify the trend. Identify the trend. Many a times, the market spikes more from trends than it spikes from support and resistance areas. Do you get it? But when you see a support area, also identify your support areas, keep them on your charts. Then draw your trends. The market spikes more from the trend than it will spike from support and resistance areas. Do you get that? But keep your support and resistance areas, and then draw your trends. Smaller time frames, watch the market, it will spike and you will make profit. Guys, that is that. That is that. It's that simple, guys. It is that simple. It is that simple. It is that simple. Guys, see, we want you all to win. We want you all to win. We want you all to win. It is that simple, guys. Are we seeing this? See, when you want to trade, look for the chart, look for the trend. The same with boom 1000, the crash 1000. Look for the chart, look for the trend. The same thing. Are you seeing this? It's the same thing. This is a zone, not just a line. This is a zone. If the market gets here, it's going to spike. It can even spike now, or it will go above this a bit and spike. Do you get that? So look for what you should be looking out for is the trend. Look for trend. Do you get it? Look for trend. Don't be looking for what you did not keep on the market. Do you get it? So also, remember I did a forward movement and a backward movement. You can also do something like this. Sorry. Okay, we have this zone here. From this low, we went through here. So the market came down here. It spiked. It started moving up here and it spiked. It moved up to this same line and it spiked. It's the same thing, basically. It's the same thing, guys. The same thing. The same thing that I did on boom 1000. This is a downward movement of boom 1000. And please, guys, please, if the devil tempts you too much, let him not tempt you to go and start selling boom 1000 and buying crash 1000. You will blow your account. You will blow your account, guys. You will blow your account. Please do not buy crash 1000. Don't buy crash and don't sell boom. You will blow your account. If you are not matured enough to trade against the spikes, please do not. All I am teaching you to do is on this. And I said, for you to catch spikes, identify the trend. When you identify the trend, look for where the market is coming from and where the market is going to. Set your trend lines, identify support and resistance areas. If the market spikes from support areas, or for example, what happened here? The market spiked from a support area, not a support line. An area, remember, it is an area, not a line. An area is not a line. It is an area, not a line. Now, if the market doesn't spike from support or resistance areas, it is locating the trend. So for now, if the market should break through this support area, it comes to this line and it's going to spike from here. Do you get it? So guys, if you want to catch spikes, now, for example, if I want to catch a spike on this line, the question is, where do I enter a trade? Now, when I discover that the market is approaching my support line, my trend line, either for the upward or the downward movement, when I discover that the market is approaching my trend line, I enter the trade immediately. So for example, if I'm to enter a trade on this, the market is coming to this line, I can enter the market here. When once the market gets to, maybe so before this small spike happens, I've entered the market, because the market can spike from this area. I've given someone a signal before and I told him to set buy limit. And guys, can you see what I told you? How that this thing forms a head or shoulder. And guess what? I said before we leave this chart, it's going to spike again. And guess what? It just spiked. Are we seeing this thing? You see, guys, you're not talking to a child. You are talking to someone who knows the market. Do you get that? So I've given someone a signal before, and I said that he should set a buy limit. And guess what? He set the buy limit, and it was just the market got to where my buy limit was. It did not activate the buy limit, and then it spiked from that place. It's the buy limit. It got very close to it, and then it spiked. Do you get that? So before the market gets to my line, I enter the trade. When it's very close to my zone, I enter the trade, because when once it's in that zone, it can spike from anywhere. Guys, are we getting that? Are we getting that? So that is that. That is that. That is that for 1,000 and crash 1,000. Identify the market, the movement of the market, where the market coming from. Identify your support area, resistance area. And I said, for this, look for an entry on boom 1,000, right? So we can use this, we can set this and say, okay, the market can come down to this point, or we can also use this, and say the market can come down to this point. If the market comes to this point and it spikes, and it doesn't spike here, it will spike from this line here, all right? So basically, that's it. See, guys, you have a lot. When you get back, look at the charts. Look at the charts. Identify the trends and do exactly what I'm saying. Guys, I'm giving you guys an assignment. Please, guys, if you don't see, look at the charts, catch spikes and come and show me. Send screenshots. If you have issues, if you still have issues, let us know. We're going to help you. All right. Thank you very much, guys. Thank you so much, guys. Thank you so much, so much, so much. Let me bring up my partner, Mr. Lawal, and let him, is he still here with us? Okay, let me bring him up and let him tell us what tomorrow entails, because tomorrow is his day. Tomorrow is his day, man. Thank you very much, guys. And please send in your questions. If you have issues, send it to us. Thank you very much. Mr. Lawal, over to you. Mr. Lawal, are you here? Are you here with us? All right. I think maybe he's a bit busy or something. All right. So for tomorrow, we are going to talk about manipulations, basically. And we're going to talk about manipulations. We're going to talk about manipulations. We're going to talk about V75. A lot of you that like trading VC. Tomorrow is going to be loaded. It's going to be fire for fire. All right. Okay, someone quickly asked the question, how can one choose lot size based on an account? Okay, now, for that one, I'm going to share my mobile screen with you. Let me quickly share my mobile screen with you guys. Okay, I'm going to stop sharing here. Okay. I'm going to stop sharing. I'm going to stop sharing right here now. How can someone, I think I showed you guys how to do this some times ago. Okay, I think it wasn't this group. It's not this group, sorry. I'm going to show you guys that again. I'm going to show you guys. Okay, how to start to, okay, how do you analyze with which time frame also? Now, like I said, first of all, identify the trend on the bigger time frames. 4 hours on the bigger time frame is so that you can tell what the market was doing in that day, what the market had been doing that day, basically. Do you get that? So after you draw your trend line on the bigger time frame, come down to the smaller time frames and draw your trend lines. Remember what I showed you guys. Draw your trend lines on the smaller time frame. Go to the 1 hour time, 1 minute time frame, 5 minutes time frame. Identify the trend lines. Look for the lower lows. Exactly what I did. Now, everything that I'm saying, this video is going to be recorded. I'm going to upload it and I'm going to send you guys the link. Watch it again and again and again. Do you get it? Watch it again and again and again. Identify the trend on a big time frame, right? The big time frame, you're talking about the 1 day time frame, the 4 hours time frame, and then come down to the smaller time frame. That's the 5 minutes time frame and the 1 minute time frame. Identify those trends on the spikes, right? What should we do with spike on crash? I mean, everything I have been saying is how to catch those spikes. When you catch a spike, you make profit. That's what you do with it. Do you get that? That's how you make profit. Identify when the market gets to a zone and it's entered the trade before it gets to that zone. And then when the spike happens, you close your trade, you're in profit. That's it, basically. I mean, it's that simple. Do you get it? Now, I'm going to show you guys exactly how. I'm going to show you guys. Someone was asking about this thing. What do you call it? What do they call that? Lot size, basically. All right. So I'm going to show you guys right now. I'm going to show you guys right now. Okay, this is it. Now, when you want to identify, all right. I'm coming to that, Mr. Kells. Mr. Kells, I'm going to shut down anytime because I have another meeting tonight. I'm trying to rush, right? Now, when you identify, when you want to take a trade and you are looking for the smallest lot size to do. Now, click on that currency pair or that pair on your chart. When you click on that, click on details. When you click on details, now come down. See where we have minimal volume. That place where we have minimal volume. The minimal volume is the lowest lot size. So when I say enter a trade on the lowest lot size, if you don't know what the lowest lot size is, this is how you get the lowest lot size. Click on the index you want to enter. Click on details. When you click on details, automatically what happens? Look for the value we have on minimal volume. Right? When you check that, that is the lowest lot size, basically. The same thing for all other pairs, all other ones, all others, basically, all of them. The same thing for Crash 1000, the minimal volume, that's the lowest lot size. Minimal volume is talking about the lowest lot size. Okay, you mean if I have an account of $10, what should I use? For example, now, I remember when I said something about your risk appetite. For me, if I have an account of $100, if I want to trade anything, I can reach the whole account to trade because my risk appetite is well beyond $100. So losing $100 won't shake me. Do you get it? It is for you to understand your risk appetite. If I tell you when you have a $10 account, open 0.001 size on so you will go there and you are like, but he said open the smaller. If your risk appetite is more than $5, risk $5. Now, opening, let's say risking $5 on a trade will warrant you to open something that is a big lot size. Because one thing I understand with derivative is that their margins are very, very small. For example, you can enter a trade on currency pairs. Sometimes you can see a margin of a trade. The lowest lot size can be $5-something for margin. So you need to have $5 or $6 in your account to be able to take that trade. But on volatility, on derivative, on synthetic indices, when you want to take a trade, basically, the margin is very, very small. Do you get it? So for example, the lowest lot size on V751S, the margin is like 0.0 something dollar. So if you have $0.5 in your account, you can take that trade. Do you get it? But if you want to risk your account, if you want to take trades, it depends on your risk appetite. See, guys, I can't come and tell you, enter this, enter. The only time I will tell you enter the lowest lot size is when I'm giving you signal. But many times when I tell you enter the lowest lot size, I'm telling you enter the lowest lot size because I want to justify myself. But for me, that trade I'm telling you enter on the lowest lot size, I can be entering on the highest lot size. Do you get it? So it depends on your risk appetite. You have an account of $10. If you want to trade minimally, conservatively, enter the trades on lowest lot size, or you can enter the lowest lot size on maybe 2 or 3 positions, basically, and you are safe. Do you get it? So that is that, guys. I'll be shutting down. Any other questions, please, guys, send it in tomorrow. Send it in tomorrow, guys. send it in tomorrow. I'm already late for a meeting. I have to run right away. This video, I'm going to, even if I don't post it immediately, we are done, for sure, send it to us. We are going to help you out. See, guys, you've paid for this masterclass and we want you to get the best. If you have further questions, any question you have, write them down. Tomorrow, guys, we are going to be live again. Same time. All right. Okay. Someone is asking for the trade we analyzed. Okay, let's see that. Okay. Well, let me get my PC screen. Okay. Let me share my screen. Okay, all right. So, someone is asking for the. Oh, funny enough, we weren't even looking at boom 1000. Remember what I said? And when it gets to this zone, it's going to spike. And that was exactly what happened, guys. That's exactly what happened. Can we see this strategy works perfectly for? Now let's see crash. It has gone beyond. Now, I noticed something also. I noticed something. When trades go beyond your trend lines on the smaller time frames, two things are involved. It's either it's trying to cover a gap, because the truth is the market would not spike until this gap is covered. This order here must be filled. This area. Are we seeing this? This gap must be filled, basically. So let's say we got to this area and we entered the trade, let's say before it got to this place, and we're expecting a spike. And the market did not spike, like what happened here, right? The market broke through our trend line. In fact, this is out of the zone entirely. That means there is something the market is trying to achieve. It's either it's trying to locate a bigger trend or it's trying to cover a gap. These are the two things that must happen. So let's say this market can actually get to this point here. After covering this gap, it can actually get to this point here and spike from this resistance area, basically. Do we see that? So that person that asked that question for this, thank you very much for reminding me this. Had it been, you didn't remind me, I wouldn't have been able to say this. So many a times, if the market breaks through your trend line, like what happened here, there are two things that are involved. It's either it's looking for a bigger zone or a bigger trend, or it's trying to cover a gap, basically. So when this covers, I know definitely that this is going to cover this gap. Once it covers this gap, what happens? It will either spike from here, or it's going to get to maybe another trend. It's going to get to maybe somewhere else to spike from there. Let me try to get a bigger, okay, maybe it could get to somewhere else, maybe another trend or a major trend to spike from there, basically. Do you get it? That person that asked that question, thank you so much for asking that question. Thank you very much. Now for boom 1000 also, we are expecting the same. This trend is continuing. It's going to continue spiking upwards. So you can actually draw this on your own trend, on your own trade, and then take this trade, guys. Take this trade. It's going to spike. Take this trade, guys. Thank you very much, guys. I have to run immediately. Oh my God, this is already 20 minutes more. Thank you very much, guys. I have to stop sharing. I have to stop broadcasting now. And I hope to see you guys tomorrow. Please, like I said, if you have questions, do not send them to us. We're going to answer you. Thank you very much, guys. I love you all, and good night.